What's up, you money makers? Welcome back to the channel. I will be reviewing ChargePoint Holdings Inc., ticker symbol CHPT. The stock is up 3.87% or $14.65. More importantly, it has got a ton of attention at the moment because it has crushed the expectations in terms of the revenue, profitability, and it got a ton of press releases as well. Many digital platforms are looking into it pretty closely, and we are started to see the volume spiked up. I used to own CHPT, I no longer own, but this is a pretty good price point if someone wants to get into CHPT. So take a look. EV charging company ChargePoint crushed the guidance, sales rise. Another article, ChargePoint stock rallies after Q4 sales beat expectations. We'll be reviewing ChargePoint reports for the full quarter and the fiscal year 2022 financial results. I'll be giving you a very high level overview of what the company is. Particularly, I am interested because the year range for the stock is $11, so it can go as low as $11, we already know, but the year range is $36 as the high price point. We'll be also reviewing some of the analyst prediction in terms of what the price point, the tip ranks things, and a couple of other portals things. So watch the full video. Make sure you hit the like button so we can share this video with more and more people. I do a ton of my due diligence, research, and analysis, and I like to share that back with you. We'll be also reviewing some of the technical pointers, including moving average, RSI, and all that kind of good stuff. I want to really say that if you take a look for 1 year, the stock went all the way to $35, and since then we have seen some of the lower lows, but now we have started seeing higher highs and higher lows, which is pretty significant. For 1 year, we are down 48%. For year to date, we are down 26%. For 6 months, we are down 33% as well. For 1 day, which is today, of course, there is a momentum because they came up with a stunning earning, and I'll be talking about more. They have first movers advantage. They have $315 million or something along those lines cash on hand. So they have massive cash on hand. For 5 days, we are up 10 to 11%. So the stock definitely got the momentum. Watch the full video, hit the like button, subscribe to the channel, and turn on the notification bell. Without further delay, let me just share really quickly what this company does. ChargePoint is an innovative company which is a fleet, hundreds of and thousands of places to charge for EV vehicle. They offer services to businesses with premium EV charging for customers and employees. They're also providing fleet intelligent flexible charging solutions to meet our fleet needs, drivers to make it easy to charge for them, and they do it all. They have 105 million charges delivered, and they're counting. Smart charging is and always has been their sole focus. After moving forward with a decade and millions of charges that they have delivered, they're pioneering new ways to make electric mobility the easy choice. Now, if you think about the electric vehicle market all in all, we know that Tesla is going to do a lot better. We know that NIO is going to do better. Not only that, many other big companies including BMW and Mercedes, they are looking into how to make EV vehicle more efficient, more luxurious, and more lucrative for the customers. ChargePoint particularly is the pioneer in this industry. They have 7x market share than any other company, at more than 70% in network level 2 charging than the closest competitor in North America. They have more than 5,000 commercial and fleet customers worldwide, and they're growing aggressively. You can imagine how fast they can grow into the Asian market, which is right now a little bit left behind, including the 76% of the Fortune 50 companies. They have 13 plus years of a business experience, have first movers advantage. There is no other company which is near to ChargePoint when it comes to smart charging. With the 13 plus years of business experience, they can do miracles, and they have more than 173,000 places to charge on the ChargePoint network just in North America and Europe. We're not even counting Asia. Now let's take a look what the stock is doing and why I am interested, why I'm super bullish. The important reason why I'm bullish is, if you take a look, we were just at $20 in the beginning of this year, January 3rd, $19.87, and we started seeing the downtrends. And this is not just ChargePoint. This is entire market. We have seen what happened at the global level with Russia and Ukraine. We have seen what happened with the inflation concerns. We have seen what happened when the Fed announced the interest rate hike that they're looking forward to do 4 hikes, as high as 4 hikes this year. So we are going to find out what happens. But this is fundamentally a great company. I'll be going into more price prediction, what the analyst thinks. Remember, this video is only for the entertainment purposes. I'm not a financial advisor, but based on what I see, what analysts are predicting the price point, there's a 2x possibility. Now, this is not your average OTC or penny stock, so it may not happen overnight. So in this particular stock, long-term investor is going to win. Patience is the key. So you want to keep that all in mind, that this is not going to happen overnight. Now, what I want to review in this article is basically what they have announced in terms of their financial earning. So quarterly revenue increased by 90% year over year. Annual revenue increased by 65% year over year. And both are crushing the estimates and top line guidance. They have more than 174,000 ports activated as of January 31st, approximately 51,000 just alone in Europe. So what they are trying to mention here is they have more than 125 or close to 125,000 activated ports in the in North America rather, and other countries. Fleet momentum continues with leading fleet companies Element, LeasePlan, USA, VAX, and Will Donlan. So with this particular ChargePoint delivered another outstanding quarter, exceeding the high end of both the quarterly and annual revenue guidance, advancing the technology leadership in the commercial fleet and residential vertical across North America and Europe. So they have the intact market that they can tap into when it comes to Asia sooner or later in 2022 and moving forward. The president and CEO mentioned that we had numerous successes in our first year as a publicly traded company, including 65% year-over-year increase in the annual revenue, 2 strategic acquisitions. So they're buying smaller companies within the realm of what they're doing. So they are acquiring more and more customers. So their expansion and activated ports account by over 60%, which is massive, and they're growing the team. Now, what revenue suggests here? I just wanted to put the numbers together so you can imagine how massive and at what level they're operating. Their fourth quarter revenue is 80.7 million, which is an increase of 90% from 42.4 million prior year with the same quarter. They have charging stations and revenue across the fourth quarter, 59.2 million, which is an increase of 109% from $28.3 million in the prior year same quarter revenue. Subscription revenue was increased as well, 17.2 million from 11 million, which is a 57% spike into the revenue as well. So they're doing on all front phenomenal. In terms of the gross margin, they have 22% gross margin, which is a very high margin for this cash flowing business, with 21% that they had in prior years. So the company obviously got how to get their operational overheads into control. They also got how to put up the technology that will be less demanding in terms of the financial burden as well. Fourth quarter non-GAAP margin was primarily excluding the stock-based compensation expenses, amortization from the acquired intangible assets. That was 24% compared to 22% in the prior year. So they expanded, or they ramped up their expenses from 22 to 24, which is you can think like 2%, but all in all kind of 10%, but they're still doing amazingly well in terms of the profitability. Income and loss, $60.5 million in loss. Once again, it's a cash burning business. They're establishing their presence. They're establishing newer stations. What it's going to do is once they have all this network set up, they'll be reaping up the revenue and profitability, which includes the $60.5 million, includes 16 to 17 million gain from the change in fair value of warrants, liabilities, 15.4 million stock-based compensation. More than anything else, I just wanted to show you this. Their liquidity is massive. As of January 31st, the balance sheet was they had $315.6 million on their balance sheet. So their balance sheet is pretty strong. Outstanding shares were 335 million. So this is massive. For the full year, if you're interested, 242 million in revenue, which is 65% up. They are increasing 90% from $91.9 million revenue on all the fronts, and they are doing amazingly well. For the full year, their net loss was $132 million. and they're going to get better at this as they grow. And they have $315 million cash on hand, so we are not expecting any stock dilution, at least at the moment. You want to keep that in mind. Now let's get into what is the price prediction, what the analyst thinks. Now I wanted to quickly share, first of all, on this portal, what we see is 1 year target $26.56. So we are at $14.15. So the train has not just left, so look into it. I'm looking into it as well. So from $15 to $26, which is a $10 to $11 gain on a $15 stock, it's a massive gain. So you want to consider that. More precisely, I just wanted to quickly run you through what the analyst thinks. So for February, we do not have the March numbers. We will be getting the numbers very soon, but 7 analysts are saying hold, 7 are saying buy, and 4 are saying strong buy, with the 18 analysts on this portal. Now if you go to tip ranks, I like to see what I see: moderate buy, the bullish sentiment in the blogger opinion. Tip ranks investors are very negative, which I respectfully disagree, because there is a lot of potential, lot of catalyst. This last 7 days it's bullish. Now what they're saying in terms of the price point, this is a bit contradictory. So take a look, very negative right here with the 4 neutral, but if you see the price prediction, it is massive. 10 out of 7 analysts are saying buy and 3 are saying hold, with the lowest price point, which is $17. So lowest prediction for the next 12 months is higher than the current price point. That's what I'm trying to get at. The average price point is $25.50, as well as the high price point is more than double, close to triple, $37. Now remember, this is based on all the analysts. This is going to be a projection for next 12 months, and this is subject to change. So you want to do your own due diligence and analysis before you buy or sell. I'm not a financial advisor. What I want to do is I want to show you how it has been trading. So if you want to see right here, once again, what is the average volume? 10.2 million, and right now today's volume is close to 3 million. But all in all, if you take a look at the historical volume, we are very well above the average volume. We are showing up higher highs and higher lows. Take a look from $11, $13, $13.57, almost $14. Once again, in the range of $14. So the higher highs as well. Today we saw $15.27. Of course, because of the earnings and the smash, they smash the guidance, they smash the revenue, they smash the profitability, and they have massive cash on hand, which is super bullish. If we take a look at this chart, this red line shows the moving average, which is almost meeting the real-time price. This is really I like to see, because tomorrow or maybe later during the week, if nothing big happens into the entire stock market, you will start seeing that the real-time price point will start going above the moving average. That will help the curve to go into the positive direction. So once again, right now we are into the decreasing sine wave. We will get back into the increasing sine wave very soon, which is something I like to see. Even though we have this earning results, you are seeing 52 RSI, not an overbought condition, not an oversold condition. You want to note that as well. So as it builds the momentum, as the market goes up, if you want to take a look, NASDAQ is down 14% right now. Dow Jones is up 150%, and S&P is almost flat with 10 and 11%. So you want to keep that in mind, that the market is not bullish at the moment. So this might not be the perfect time, but when it gets back, the fundamentally strong companies will rebound sooner, faster than any other companies or speculative stock. Right now, this company has $4.73 billion in market cap. The company is performing quarter over quarter. They're crushing the revenue. They're crushing the profitability. They're crushing the balance sheet. Cash on hand, take a look, 65 million in Q3, July 56 million, April 40 million, January 42 million, last October we are seeing 36.37 million. So they're doing amazingly well. I'm super bullish about the company. Look into it, hit the like button, subscribe to the channel. I'll see you in the next video. Thanks for watching.